Hello friends, hi, good morning. Hope you all are doing well today. Well guys, today in this video we'll be going to discuss and address with you a few points about the Saudi Arabia tax guide, which has been updated as of June 30th, 2026. Why this is particularly addressed today is because any professional, be it a CFO, financial controller, finance manager, accountant, accounting manager, tax accountant, tax manager. Everyone working in the Saudi Arabia in the profession of the accounting and finance must aware about the changes, a requirement as per the Zatka and the statutory rules. In this video, we will be discussing about the Saudi Arabia tax guide, where we will be addressing the zakat, tax, VAT, corporate tax, Zatka requirement for e-invoicing, and everything about running a business that required to know or operating in the Kingdom of Saudi Arabia. And especially this is required for a professional like us or CFOs, finance manager, accounting manager, and until an accountant. Well, as a key facts, why the let us discuss the glance about the VAT first. The VAT has been implemented in Saudi Arabia in the year of 2018 with 5% VAT rate. Later on in the year 2020, during the COVID 2020 July, the Zatka has been implemented, or the statutory authority has been implemented the VAT rate from the 5% to the 15% as a standard rate. Then there is a 20% corporate tax on the foreign owned shares or the multinational companies, and 2.5% of the zakat to be calculated on Saudi owned or the GCC owned companies and the shareholders. 5% RETT, which is a real estate transactional tax. Earlier it was also called a 5% VAT rate, and later on the Zatka department has been segregated this from the VAT to the RETT. Now, any organization earning 375,000 Saudi Riyal turnover are mandatory to register themselves for the VAT. And there is a new wave as of June 30th, 2026, that every organization must must register their firms to the Fatura portal and issue and receive the invoices from and to only through the Fatura or e-invoicing. Well guys, congratulations for those who are working in the Saudi Arabia, and it's very amazing that e-invoices processed by the Zatka in the year 2025 has been more than 8.2 billion invoices, and it's tremendous achievement. Congratulations to the Zatka and the people who is compliant for their organization and submitting the invoices. Well, there is something called the withholding tax. WHT we also describe it. Well, withholding tax, this is something that I will discuss in the further slides future. So for the withholding tax, Zatka or the Kingdom of Saudi Arabia has signed the double tax treaty agreement with more than 60 countries, which ultimately gives an impact or which gives an cash flow advantage to an organization, which we will be going to discuss in the further slides later. VAT in Saudi Arabia. Let's discuss registration requirement, the rates, and the filing for the returns. Well, there is a threshold has been announced by the Zatka department for the VAT registration. The mandatory is 375,000 Saudi Riyal annual turnover, and voluntarily, if one organization wants themselves to register voluntarily, their revenue must have more than 187,500 Saudi riyal or above 375 Saudi riyal. Further, non-resident organization must register regardless of their turnover. While moving further, the VAT rates. The VAT Zakah in Saudi Arabia has announced the 15% standard as a VAT rate after June 2025, after June 2022 on most goods and services, and 0% rate tax or the VAT for exports outside the GCC, international transport, and certain medicines. For the more details about the medicines, please visit the Zakka portal. You'll get all the other further information. And indeed, like unlike any other organization or country, we do certain exempted products dealing with the supplier and the customers. And indeed, Zakka has considered that and they have implemented the exemption for the residential real estate, specific financial services, local passenger transports. Well, there is a key distinctions one has to understand in the profession that zero rated allows full input VAT recovery from the Zakka authority. Exempt does not restrict a recovery, has a real cash flow consequences. So this is a major understanding one has to apply between the zero rated tax or the VAT and the exemption VAT. Exemption VAT, it's recovery restricted for the recovery, and zero rated VAT, one can claim the input VAT. Well, further, there is something that one has to understand that there is a limit, there is a due date, or there is a deadline for filing your VAT return. For an example, if your annual turnover is greater than 40 million Saudi riyal, you have an option to select a quarterly or monthly return filing. Why it is so? Well, friends, this is very much advantage for an organization who is having a cash crunch or having a cash flow issues with the working capital. Well, if you opted for the quarterly, for the month 1 and 2, you do not have to pay money upfront. Instead, 1, 2 and 3 month accumulated return for the quarter 1 example in the following month. So here is an advantage that you can utilize your working capital cash flow for buying an inventory for your organization or using it for operational expenses, of course. So consider this and choose the appropriate filing period, whether it is required monthly to avoid a burden and avoid the reconciliation, or go with the quarterly. So whatever you follow, make sure that every filing return must be reconciled with your ERP data, be it the revenue or be it your purchase records, must match. Well, continuing to the second one. Well, now let us discuss about the zakat versus corporate tax. So this is a dual track system the one has to understand with an open eye and eagle tractions. Saudi Arabia's defining tax features is based on the ownership nationality that determines which regime to be applied. A single company can own by both local as well as a foreign national. So, zakat, Saudi Arabia and the GCC owners 2.5% of the zakat based on the net worth held for the lunar calendar, that is an Islamic calendar, applies to those who are owners or the shareholders of a citizen of Saudi or the national of the GCC national. 100% Saudi. Who are those? Those are nothing but 100% Saudi or the GCC ownership, a part of it. If it is part of it, only part of those net worth alone to be calculated for the zakat purpose. Otherwise, they fall into the corporate tax. Well, corporate income tax, it is like same like any other country that follows. Only the tax percentage changes. Well, corporate income tax for the foreign owners is applied, not for the Saudi or the GCC nationals. So it is a 20% of the net adjusted profit on the non-Saudi and non-GCC shareholders or the owned companies, as we discussed previously. And this applies not only to the proprietor but also to limited liability companies, joint stock companies, and branches, and the PE, that is permanent establishments. Let's give how to calculate this an example only, that in an organization we have 100% shareholders that has been split between the 60% shareholders given to the Saudi national and the 40% of the shareholders owned by the foreign national. So each share taxed independently under its own regime. That means a 60% of the Saudi shares has to be calculated based on the lunar calendar on their net worth held, and the rest of the 40% of the shareholders must pay the corporate income tax based on the regime for the foreign owners. So hope you guys understood here the requirements, the applicability of the zakat and the corporate income tax and the liability to be calculated. Further, in case if you have any questions, please drop your queries into the comments below. Would like to answer it as soon as possible. Well, as we discussed previous two slides, those are the common points one might be aware about it, and of course it is basic things that one has to be aware. So why this presentation, why this video is being made is to discuss what's new for the year 2026, that zakat's full tax intelligence year, we can say. Zakat's 2026 enforcement shift real-time, cross-referenced compliance over periodical audits. So this includes, the first is Wave 24, full VAT base integrated. Every VAT registered business above Saudi Riyal 375,000 turnover must integrate with Fatura portal as at 30th June 2026. Second, VAT grouping now permitted in Saudi Arabia. Same activity entities can file as one taxpayer instead of multiple entities to be paid separately. Intercompany supplies fall outside the VAT. Special economic zone entities excluded from this kind of segregations. Intercompany transactions. Any intercompany transactions to be considered deemed supplier. So related entities, assets, or the transaction transfers now taxable at the applicable rate, which is a normal standard rate. A fourth point is that there are the small shop owners or MSMEs who market their sales, they sell out their products through the digital marketing. Let's say for an example, Instagram, Facebook, WhatsApp, and many other platforms. So guys, from the January 1st 2026, the Zakka has announced that platforms facilitating non-resident sales to Saudi consumers are VAT liable parties. So make sure that any organization buying such things, consider there is a VAT implication, and VAT applicability has already been implemented from this year, January 1st 2026. Well, moving to our next slide, Fatura e-invoicing phase 2 integration. Well, Fatura is Zatka's national e-invoicing mandate, one of the most consequential compliance program in the Kingdom of Saudi Arabia's history. And in phase 2, well, before we go to the phase 2, as we are all aware about that, the Fatura or the e-invoicing requirement has been implemented on the phase manner. The phase 1 has already been implemented with all many other major MNCs, and the turnover of the more than 100 million Saudi riyals, or I guess it's a 80 million Saudi riyal. Or this is the second phase, requires live API integration with your Zatka voucher. So phase 1, it is live since the 2021 December onwards. Generate and stores e-invoice digitally. No such integration was required. In the phase 2 integration, which is effective from the January 2023, any organization dealing with a B2B or B2G, that is business to business, business to government, invoices require real-time Zakat clearance before issuing them. And by business to consumer, invoices reported within 24 hours after the issuance of the invoices. While in the wave 24 of the Fatura integration, full coverage as of June 30, 2026 deadline has been given. All VAT registered business above the turnover of Saudi riyals 375,000 must be integrated, covering the kingdom's entire VAT base. Well guys, please be understand that if any invoices carrying no Zatka or the Fatura integration has no legal or the tax validity even if delivered to the buyer. So make sure that the government would not be recognized your invoices if it has not been integrated with Fatura voucher. So be compliant, be professional. Let's move to the next slide here. Well, as I was addressing in my second slide, that withholding tax and other taxes in the Saudi Arabia. Let's discuss about the withholding tax. Withholding tax is nothing but the payment to the cross-holder while making the payment, and it is applicable to the payment that one organization made for a cross-border supplier. Withholding tax is also called WHT, and it is applied when a Saudi entity pays to a non-Saudi resident. The Saudi payer deducts and remits the payment to the non-resident company, and that deducted amount from the payment, it could be for, if it is for dividend, interest and the rent, the applicable rate to deduct is 5%. And if it is insurance, freight, telecom, the applicable rate to deduct is 5%. 50% rate has been applied if the deduction is for the payment made against royalties, technical services. And if the payment made to the non-resident supplier against the management fees, the deduction rate are 20%. So here, as I was discussing in my earlier slides, that the Kingdom of Saudi Arabia has signed with 60 plus national for the double tax treaties can reduce the rate with a tax residence certificate, provided that you have to submit this into the portal online and make the payment as per the WTT. While those who are working into the real estate business, as a professional or as an accountant, one has to understand that real estate transaction tax, that is 5% of property value on most disposals, paid by seller before transfer is recorded. First time in Saudi, home buyers may receive a relief of up to 1 million. So similar to the in other countries, Saudi Arabia has excise tax on tobacco, energy drinks, and 50% of excise tax has been imposed for the soft or the sweetened drinks, tired sugar or based structure from the 2026 onwards. Customs duty in Saudi Arabia is like GCC, is like any other GCC countries. Common national tariff applies to import. Sector specific rates for tobacco and certain agricultural goods is subjected here. Well, what will happen if one would not compliant for filing the returns, applying the withholding tax rates, not deducting the withholding tax when making a payment to the non-resident, not filing the return on time for the VAT, not making the payment of the VAT output after adjusting with the VAT input? Let us discuss in this video what will happen if one is not statutorily compliant. What is impact for the organization? Of course, it, if you are not compliant with the statutory law, it will not only impact to our professional or our name, but also it gives a huge impact to a business that runs trusting us. Well guys, enforcement is increasingly automated. That is why the Fatura portal has been implemented. E-invoicing data is cross-checked against VAT returns, surfacing discrepancies faster and manual audit ever could. So digital life is made the life easier. In same time, those who are non-compliant, for them it is nothing else but a one word, is hectic life for them. If one follows the reconciliation, compliance for filing and making the payment on time, for them it's like a heaven tool. Well, let's discuss in the table below as shown kind of a violation and the penalties for the violations made. Let's say for an example, failure to the monthly 5% of the payment due to be made to the authority. Well, incorrect return. If you file any kind of information incorrectly, that imposes of the 50% of the differences. So here what I was telling, that reconciliation, doing the reconciliation before submitting your return from your sales, from your purchases, from your output tax, from your input tax, would indeed help the organization to save themselves from such kind of a huge penalties. And penalty is not just the numbers of the payments to make, it is a name that destroys before the authorities for your organization, because organization that trust you and appointed you to file and follow the compliance full instructions from the statutory authority. Well, moving to the next, tax evasion. If the tax authority finds there is a discrepancies, there is an evasion in the filing or the data you have submitted, trust me guys, it's going to be very painful for your organization that they have to pay 3 times value involved into this evasion. Issuing invoice while unregistered. While many of the organizations, they may think that they can issue that nobody can eye catch to them, nobody can see what they are doing. Well, there is a day that the thief will get catched out. So instead of preventing on the last minute, prevent your organization from the day one. If you are eligible and your organization is eligible and required to register for the VAT registration, please follow the procedure for the ZATACA registration and get this registered your organization. And by this you are not only saving your company's name that you work, but also you are appreciating your position. Otherwise you will have to pay up to 100,000 Saudi Riyal as a penalty. Well, e-invoice non-compliance, if anyone would not follow the e-invoice compliance procedure, would pay between Saudi Riyal 5,000 to 50,000 per violation. Guys, here it comes. As I was saying, reconciliation is required before submitting the returns. While voluntary correction is almost always a cheaper. Instead of the tax evasion comes by the authority and they would send you a notice for the mistake you have made. Instead of that, do go now, go to the ZATACA portal, pull out all the reports, do the reconciliation from the YTD, and submit for any discrepancies. So here you may have to pay a little amount. Instead of the tax evasion a huge penalty, they would recognize later. So here it says that I mentioned self-correcting and unreported or underreported VAT liability before any audit begins generally waives the 50% incorrect returns penalty. Here you see, once you do the reconciliation right now, log into the portal, pull out all the reports, go to your ERP, pull out all the reports, do the reconciliation. Guys, trust me, you will drop me an email if it is zero discrepancy. If you find any discrepancy, just say thanks. That is what I required in this video. The overall, the purpose of making the video is only to make awareness and give you a guidance. What is required, how it is required. That's it. Nobody is pointing that one is wrong, one is right. The agenda, the momentum, you find there is a discrepancy is there, you don't have to disclose the number. Just say thank you. Well, going to the next slide. Saudi, how the taxation has been implemented in Saudi Arabia and why it was. Well, why there is only one point has been described in two things. First, the Saudi government wants to have a revenue generated not from the oil refineries but from non-oil sector. This is what the Saudi tax has been implemented. This is the point one. And the point two is that of Vision 2030. Hope you guys all aware about the Vision 2030. If not, drop me a comment. We will send you a link for Vision 2030 for Saudi Arabia. Well, as a basic information, you guys are aware that January 2018 was the first time that VAT has been introduced at 5% in Kingdom of Saudi Arabia. Later, during the COVID, July 2020, VAT raised it from the 5% to 15%, and real estate transaction tax has been implemented 5%, replacing VAT. In December 2021, first phase of Fatura, that is e-invoice generation, was made mandatorily. In January 2023, phase 2 of Fatura begins with the wave of Saudi Riyal 3 billion plus turnover organizations only. In April 2025, VAT grouping was permitted. Intercompany transactions was reclassified as deemed supplies, and VAT applicability has been made mandatorily. And from the June 2026, 30th June 2026, wave of 24th deadline for the e-invoice, full VAT population under Fatura has been implemented across the Kingdom of Saudi Arabia. Guys, this is a very good information that the roadmap gives you how faster the Saudi Arabia is moving to become a leader into the industries and focus from non-oil revenue. There could be many other things that we can expect in future, and it could be a surprise and unexpected things. Standard checklist for the compliance to follow. Standard checklist for the compliance to follow. So this ensures that your business is fully compliant ahead of the wave 2024 and ZATACA's intensified enforcement here. Confirm your Fatura wave status. If your organization is not yet being Fatura compliant full, please go now, register yourself and be a compliant full. Please go now, register yourself and be a compliant for the first stage. While moving to the second stage, review your zakat and the corporate income tax ownership. If you are somehow, there are some owners in your organization, foreigners or the non-GCC or non-Saudis, please do correct it right immediately. Contact your auditors, your tax consultants, and ask them to make sure that there is no scrutiny from the authorities due to this non-compliance if anyone has done it. And this is the right time one can correct their filings. And do the audit of the intercompany transaction if at all you have done any, and apply the VAT, because any intercompany transaction is deemed to be supplies and subject for the standard VAT rate. And there is a grouping is required as the grouping permitted in the Kingdom of Saudi Arabia since last year. Please follow the grouping instructions and be compliant for that. Evaluate your VAT grouping eligibility, and this VAT grouping is excluded for the special economic zones. And confirm the marketplace. If at all you are having any transactions with the marketplace, do not buy without paying the VAT. If at all the organizations having purchased it from the marketplace and having no invoices with them, then trust me, this will impact to your local content for your organization, and impact to your VAT, and impact to your corporate income tax or the zakat. So be compliant, guys. Then verify the withholding tax classification as per the rates and as per the services taken or the amount you are rendering. It is against the royalties, technical fees, management fees, interest, and so on. So before making the payment, make sure against what you are making the payment and how much to be deducted after considering the double tax treaty agreement. Well guys, this is all about for today. If in case you have any concern, any requirement is needed for a better understanding, please do drop me a message in below. Comment me. Would love to give you as soon as possible response. Well, thank you so much guys, and it is really indeed a much more information shared today. If at all any further information comes for the Saudi Arabia tax purpose, we will indeed share to you. Well, soon we'll be going to discuss for other region in the GCCs for the tax implementation. Thank you and have a very good day. Bye bye.